Hey, what's up, guys? Today's Asia session, we took one long position on MNQ. And as always, I'm going to get through the three-step process that defines our system and it's basically the reason why we enter any trade. So, first things first, we need the liquidity grab, right? So, if you go into the higher time frame, the hourly specifically, you'll see that we had this previous day low here from New York, and that level was swept. Now, the only issue I personally had is that price wasn't very directional after the sweep. As you can see, we had very back and forth choppy price. Generally, after a significant level like a previous day low, an hourly high, 4-hour high, or overnight levels, price grabs that liquidity and shows clear direction in one way or the other. So when we have chop like this, what I'm thinking is when finally price finds a direction, whether bullish or bearish, I need a little bit of extra signs that the direction is being supported, or maybe like more confluence, I mean. So today we did get it, which was awesome, and we got it going into Asia. Now I wasn't trading the end of New York. I was waiting for an Asia take because I already took one earlier here. But let's see, 1 hour. Back to the 1 hour. Let me show you what I mean by having very bullish signs. So we'll just count them as we go. We have a bearish fair value gap created during New York. What's bullish sign number one? The fact that we inversed it after a liquidity grab. So we had our sweep, we had price expansion to the upside, not only inversing a bearish gap, but creating a bullish gap. This is a really large 1 hour gap. And during this creation, we also created a 30-minute gap right at the top. So we have bullish sign one, which is the engulfing 1 hour candle. Notice that this is very displacive. That's a good sign. Sign two, we had the inversion of a bearish 1 hour gap. Sign three, we created a bullish gap on the way to the inversion. Now, let me go to the 30 so we can see we have a 30-minute gap right here that was respected. So price did its typical rebalance and then respect of the gap, right? So this is what you want to see on the lower time frames too if you're looking for, let's say, an entry model. So if this happens in the larger time frame, it just tells me that there's more reasons to support, in today's example, the bullish trend, right? This is bullish, but it works the same way for the bearish, for the opposite, right? Opposite direction, I mean. So now we have a lot of reasons to believe that there's a short-term bullish trend, but of course we have to wait for Asia and see, does Asia respect all this price action that we just created? So upon opening, we continue to rebalance this 30-minute, and then this is when I was convinced that short-term buyers were in control. We rebalanced the gap, expanded away from it, right? Because had we done the opposite, inversed it, I would have been more patient. Had we gone down here, I'd be more patient, assuming that we would rebalance this larger 1 hour gap and then maybe continue this way, right? But we did not even rebalance anything in this price range. So this whole purple reference is that 1 hour for value gap, the bullish one. Price didn't go to anything in here, which tells me that this trend is being supported. Okay, so it is normal for price to draw into these gaps, especially the hourly ones, and then close in the bullish direction, for example. But when this doesn't even happen, that just tells me bullish trend is being supported. So now we can have more confidence in putting risk on, but only for longs. The very next gap was this guy, 1 hour or 1 minute one, and that was pretty much our entry model. So let's just review this. Liquidity grab, we got previous day low down here. Established trend, we had all this bullish price action, clearly a bullish trend, inversing an hourly gap, creating an hourly bullish gap, creating and respecting a 30-minute bullish gap, and then expanding away from it, creating bullish structure. So for me, this is valid, right? Now, we have step one, step two, we just need an entry model, and that happened right here. So 1 minute fair value gap created, price again came in to rebalance it just like how I did the 30-minute, and then closed in the bullish direction. Now, technically speaking, my entry should have been right here, a little bit higher price, but this candle sequence alone was pretty engulfing and fast. We had so much bullish confluence, I figured I'm going to mark it in, so we got in a little bit earlier. And then stop loss today was actually at this wick back here instead of this near swing low. I did that because price was, honestly, if you look at this price, it was slow, but it was a little wick heavy. So when price is a little wick heavy, I'm willing to give my stop loss just a little bit more breathing room. And this wick right here was a lower time frame liquidity level anyway. I figured why not just leave my stop there, let it breathe. And simply our target was a 2R inside this 15-minute fair value gap, which should have been a magnet for price anyway. So that's pretty much the reason why we entered a long position. I did want to, actually, let's check the trend. It's very choppy, but it's still overall more bullish than bearish. And that was pretty much it, guys. So we have our liquidity grab, our established trend, and then we look for an entry model. Hope that makes sense. And if you watch any of the previous videos, you'll see that it's always this 3-step process. Hope you guys have a good night and session. Peace out.